Today I want to have a look at another company in the technology sector that specializes in the creation of tiny semiconductors, and that company is Applied Materials. So today I want to figure out if Applied Materials will soon reach their new all-time high and if buying the company now will yield you great return in the near future. First of all, we can see that AMAT is a dividend company. They currently have a dividend yield of 0.87% with a nice low trailing free cash flow payout ratio of only 16%, which leaves 84% of their free cash flow to use for things like innovation, which is very important for companies specifically in the technology sector. Now jumping straight to the 9-pillar analysis, we can see that AMAT gets a rating of 9 out of 9. Something I really love about this company is their steady double-digit growth. We can see that their revenue has been growing on average over the past 5 years at a rate of 10.24%, free cash flow at 25%, and net income at 16.65%. Now, as we can see, the free cash flow is increasing at a higher rate than the net income, which I love, as the free cash flow of a company is essentially used for everything and the net income is just a measuring metric. Now we can also see that their 5-year PE ratio and their price to free cash flow are both sitting in the ranges we like them to be. The price to free cash flow is sitting at only 12.43 over the past 5 years. Though if we have a look a little closer, we can see that the current price to free cash flow is sitting at 20.41, which is actually fairly close to being overvalued. We can also see that it has been rising at a rate of 16% over the past 5 years, every single year, so that is something we have to keep our eyes on. Now we can also see that AMAT has a 5-year profit margin of 46.57%, and they are decreasing their shares outstanding at a rate of 2% yearly over the past 5 years, so that is very nice. Now another thing I love about this company is their very high consecutive dividend growth, sitting at 12.15%, and if we have a look a little closer, we can see that from 2019 they actually increased their dividend by almost 100%. Now we can finally get to calculating the company's intrinsic value, first using the Graham's formula revised. And here we plugged in a growth estimate of 11.47% every single year into the future, which will give us an intrinsic value of $183.12, which is basically spot on with the current trading price. Now for our second valuation model, we take the free cash flow of the company and calculate the future growth rate of 24.3% yearly. We then plug in a discount rate at 11.4% and get an intrinsic value of $274.92. Now for the third valuation model, we want to compare Applied Materials to two of its competitors. Now through this analysis, when comparing the PE ratio of AMAT to these two companies, we get an intrinsic value of $274.05, again quite higher than the current trading price. And finally, moving to the dividend discount model, where we project a growth rate of 10.67% and get an intrinsic value of $216.24. Now arriving to the ultimate valuation, where we average out the 4 valuation models and get an ultimate intrinsic value of $237, which is almost 30% higher than the current trading price of the company. And if we plug in a margin of safety of 20%, we get an acceptable buy price at $189.67. So overall, Applied Materials is currently trading below its intrinsic value, and all their 9 pillars are sitting in the green. And with the AI boom and the tech stock boom, I really believe that Applied Materials will go up in price over the next few years. And with that, I hope that you enjoyed the video. Make sure to leave a like and subscribe, as it really helps me out.